Hello everyone, this is going to be the final video for the construction and process, whichever one you want to call it, KIP account. Problems, basically the overall, this is going to be an overall loss on the construction contract using the percentage of completion method and then the completed contract method. Again, make sure you're watching these videos in the right order. The first one is going to be the basics video. The second one is the completed contract method for the basics video. Then we have an advanced topics video that is the first part of this packet that has just some conceptual overview, and then also the loss in the current period for the percentage of completion completed contract, and then this is the final video. Okay, so again, we're just going to go quickly through a lot of this stuff. We're just going to highlight the differences, and let's get going. Okay, so again, we have the exact same facts. We're not going to read those because again, they're literally the same thing. The only thing that changes is this right here goes to $7 million, and before it was $5 million in the initial problem, and now it's and then it was $6 million in the second problem, and now it is going to be $7 million. Okay, so now we're supposed to prepare the journal entries again. Year one, we're not going to spend any time on because again, this is exactly the same as the other entries. I just have it here for completeness purposes if you would like to look it over. But again, this is the exact same thing as all the other videos. There's no differences there. Okay, here is where we're going to highlight the differences on basically on years 2 and 3. Okay, so 2017 and 2018. Okay, so we have all the facts right here, so we don't need to flip back to the problem. So this is basically just a copy of the chart. Okay, the first thing is that changes is this right here. So it basically ends up being a situation where the construction and process gets debited for $5 million and the materials cash payables gets credited for $5 million. Okay, why is that? Well, again, the difference between $7 million and $2 million is $5 million. And again, we've gone over that reasoning many times. By this point, that should be pretty easy to understand why we're doing $5 million. Okay, $4 million is coming from there for progress billings. Cash collected is $6 million. Then this one right here, this is the hardest part of what we need to do. This is essentially the hardest problem that they could give you. Okay, so if you could work through something like this, then you should be fine. And this right here is the hardest part of the overall problem. This and then the entries that are similar to this for 2018, the revenue entries for 2018. If you can do these types of entries, then you should basically be golden for the exam, okay? Because this is the hardest type of problem. If you can do this one, then presumably, as long as then you can do the other ones, right? Because the other ones are not as hard, okay? So, but you still need to practice all three scenarios, right? The scenarios are overall profit the entire 3 years, no loss in any year. Then we have a loss in the current year, that's one scenario. And the third scenario is an overall loss in the contract. Okay, so those are all the scenarios you need to practice. Okay, so basically, this right here we need to solve for. Okay, so again, we've incurred $7 million of cost to date, okay, and we have $3.5 million remaining. That gives us a total cost of $10.5 million, okay? We get our percentage by taking $7 million dividing by $10.5 million. That gives us 67% of the way done. We multiply that by the revenue. That gives us, we can recognize $6,666,667 to date, okay? We've recognized $2.5 million before, okay? So that means that we're supposed to recognize $4.166667 million, okay? Now, the thing about it is that, so you can see that that's the credit to the revenue. If we look here, the gross profit, that's not the same amount that's credited to KIP. What's going on there? Okay, this is the situation where these calculations, they don't really work anymore. Okay, they don't work in the same way as when we had an overall profit every single year. We had a profit, or we had a loss in 1 year. These calculations still work. However, now we have to change up the way we're doing our calculations. Okay, so what we need to do is that we need to basically say, what's the total contract price? Okay, and that's $10 million, right? And then what's our total costs, right? But what's our total estimate of the costs? Well, that's going to be 10.5, right? So that means that we think that we're going to have a loss of $500,000, right? Because again, we're going to incur costs of $10.5 million, but we're only going to have revenue of $10 million. So we think on an overall basis, we're going to incur a loss of $500,000. Okay, so what that means is that we have to recognize that loss in the current period because that's how it works in accounting. Once you're aware of a loss, you have to recognize it as soon as you're aware of it. Okay, however, we have a catch. Okay, if we flip back to the prior year, okay, we debited KIP for $500,000, meaning we recognized $500,000 of gross profit in the previous year. Okay, now we want to be at a total of $500,000 of loss. So basically, this is the situation. Okay, we recognized profit in 2016, okay? At the end of 2017, okay, we want to be at negative 500,000, okay? And so to get there, we have to recognize a loss in 2017 of $1 million, right? Because overall, we've already recorded 500,000 bucks, but at the end of the day, at the end of 2017, we want to record a loss of 500,000 because that's the loss on the contract, right? Because again, the price is 10 million, the total costs are 10.5 million. So in order to get from 500,000 to negative 500,000, we have to credit KIP for $1 million. We have to record a loss of 1 million, okay? So this is the specific scenario where you can see that the construction expense no longer equals the amount that you pay out for the construction and process, like the actual cash materials payables. This is the scenario I kept telling you about before, where what you have to do to solve for this construction expense account, there's one way to solve for it, and one way only. Okay, so you have to be very careful when you do these calculations. You solve for the KIP loss, and you solve for the revenue, and then you plug the construction expense account. Okay, so again, remember, you have to plug this account. You cannot solve for this account directly. Do not use 5 million. Do not try to solve for it another way. The only way you can do it is to solve for the KIP loss and solve for the revenue from the long-term contracts, $4 million. Okay, so once you've done that, you just plug construction expense and that's it, okay? So that's basically the main difference between the other scenarios and this one, is that we have to do all of this in the current year. Now, if we look at these at the bottom, if we totaled this up, this is $1 million. So if we total it across years, it still gets us to $1 million of loss, but we're only looking at 2017, and so it doesn't really work in that way, so I wouldn't use this method anymore. The only thing I would use this method for is to solve for revenue, because that's the only way you can solve for revenue, really, is that you have to use the 67% and then do all these calculations, okay? That's the way you solve for revenue, but then to get the KIP amount, you cannot use this method anymore. You have to do it the way I just did it down here, which is to determine the overall loss and then determine how much profit you've recognized, which means you have to reverse out the profit to get to zero, but then you have to go another $500,000 further, right? Okay, so that's $1 million of loss. Okay, now let's go to the last year. Okay, again, these first three journal entries, we're just kind of breezing past them because we know how to do these, right? Where'd 3.5 million come from? 10 million. 10.5 million times 7 million, okay? 4.5, 3.1, okay? Now, the last journal entries, okay, what do we do? This journal entry here is exactly the same as the problems before, so we're not going to spend a ton of time here. We're just taking off the billings and then taking off the KIP account at 10 million. Then we have this journal entry here. What's going on here? Okay, well, basically, in this case, okay, we recorded the entire loss in the prior year, right? So in that case, we already have recorded $1 million of loss in that year to get to an overall loss of $500,000. Okay, so what we need to do is that we need to determine in 2018 how much cost did we incur, right? Because at that point, that's going to tell us, was our estimate correct? And then do we need to change our estimate? Okay, do we need to change anything? Well, if we look, we actually did incur $10.5 million of expense, so we actually don't need to change anything because our estimate was correct. And we recorded the full loss on the contract in 2017, right? If we did the math again in 2018, what is our overall profit or loss? Our overall profit or loss is a loss of 500,000 bucks, right? Because again, contract price 10 million, cost of 10.5 million, loss of 500,000. Okay, we already recorded a $500,000 loss in the previous periods. So that means we don't need to record any gain or loss this period because everything is correctly stated in the KIP account, right? Because again, we would have recorded a $500,000 debit in the first year, then we recorded $1 million credit, which gives us a credit to KIP of $500,000, okay, which is a loss of $500,000, okay? So that means we've incurred all the costs. We can recognize 100% of the revenue. We recognized about 6 million in the prior periods. That means we're recognizing 3 million in this period. So we do revenue from long-term contracts at 3 million. Again, construction expenses are going to be a plug. Okay, the KIP is zero. The KIP is zero because, like I just said, we're not recognizing any profit or loss. The profit or loss is recognized in the KIP account, as it always has been. Okay, so that means that there's nothing going into the KIP account here, and so that means that the revenue and the construction expenses are going to be equal in the last year. Okay. Again, this is assuming that the construction expense does not change for the last year. If it does change, then in that case, you actually have to recognize, if it goes up, you have to recognize more loss, right? Because again, you would have a bigger loss. But if it went down, then you would actually recognize a gain and you'd recognize a debit to KIP. Okay. So I'm not going to go into all that right here just because the problem doesn't call for that, but if it did, that's the way you would deal with it, okay? If the estimate of cost went up to something like 11 million, okay, in that case, you would have an overall loss of 1 million. You would have recorded 500K of loss total from the prior periods. That means you would need to record a credit to KIP for $500,000 to actually record that 500 extra of loss, right? Because we're incurring 500,000 extra of expense. If the expenses went down to something like 10.3 million, well, in that case, you would actually have to record an increase to KIP of 200,000, right? Because now you want to have a total loss of 300,000 because the total contract price would be 10 million and the expenses would be 10.3, but you've recorded, so far, you've recorded negative 500,000 in KIP. So now you want negative 300,000, you got to record an increase of 200,000, okay? And again, the revenue itself would be the same, right? It wouldn't change in any scenario because you would finish the contract. So the revenue number would be the same. The only thing would be the debit or credit to KIP, which again, the construction expense is then just plugged, okay? So that's the end of the overall loss scenario for the percentage of completion. Let's do the completed contract method, which fortunately is easier, okay? So again, the first year we're skipping. We're not looking at this very much because again, these are the exact same numbers. We don't need to worry about that. We're gonna focus in on the problem, the part of the problem that is different. So again, these numbers are all the same except for this one. It went up to 5 million because again, we have $700,000 right here. We have $7 million of costs incurred to date. Okay, so 7 million minus 2 million would be 5 million. Okay, so that will give us 5 million for the, for the KIP, debit, and then the materials, cash payables will be 5 million. These are exactly the same. Again, those are coming from the 4 million for the progress billings and then the cash collected of 6 million. Okay, then again, remember, because of the fact that we have an overall loss on this contract, we need to record the loss for both the percentage of completion and the completed contract methods. Okay, we need to record the loss for both methods. Okay, and so in that case, we need to think back. Okay, what did we do in the previous year? Okay, what did we do in the previous year? Well, we did not record any profit or revenue here, right? So that means that as opposed to the percentage of completion method where we do record revenue, we don't have to reverse out any revenue or gross profit that we've recorded, right? We don't have to reverse any gross profit because we haven't recorded any gross profit. So again, the total contract price is 10 million. Our estimate of the total cost is going to be 10.5. It's the same as the facts before, so that means we'll have an overall loss. Again, remember, we have 7 million plus 3.5 million. That's going to give us a total expected cost of 10.5. Our contract price is still 10 million. Okay, so that gives us an overall loss of 500,000. So that means we just record a loss of 500,000 for the completed contract method. Okay, again, we don't need to reverse anything out from the previous period. We just need to record the overall loss when we're sure it's going to happen. Okay, for completed contract method. Okay, the last year, everything here is exactly the same. The only differences are at the bottom. So again, the cost of construction would be 10.5 million. KIP would go out at 10.5 million because again, by the end of this thing, we would have recorded 10.5 million of expense, right? So that we need to actually do the expenses themselves. And then we need to remove KIP at 10.5 million because that would be the balancing KIP. Then billings on KIP would still be 10 million because again, we would just add these up. That gives us 10 million. And then we recognize the revenue of 10 million, okay? So that's basically the end of this video. If things were a little fast at the end, that's fine. You can just go back and rewatch it if you need to. I try to just go a little bit quicker just to get a little bit of efficiency towards the end because basically we're doing the same problem with just almost the exact same numbers, just one or two things changed. And so a lot of these basic journal entries, I kind of just went ahead and skipped them just because at some point, we're spending a lot of time on that when it's literally the same thing every single time, okay? And so basically that is the end of this video and that's the end of this topic. So I hope that was helpful.